Welcome back to Trading 360. It's time for the disruptors. Gorge Tsilis is with us every day, senior markets correspondent to the Ameritrade Network, taking a look at ZScaler. I see it down 11%. A longer cycle for sales is weighing on the company. Tell me a little bit about your thoughts.
Yeah, I mean, this is an interesting one, Nicole, because for all intents and purposes, if you look at the report and sales and earnings as well as guidance, everything looks pretty rosy. But you're right. I think some of the new billings as well as deferred revenue growth expectations may be decelerating for ZScaler, and that's why we're seeing the stock to the downside. Now, it is actually one of the leaders when it comes down to cybersecurity, especially for remote access as well as private key access for remote workers, but also application-based security products that are integrated very well with companies like Microsoft and even Salesforce, Salesforce.com. Now, if you look at the report, fantastic growth numbers. The earnings per share printed about 29 cents, beating the 26 estimate. Now, that's more than double the 14-cent number that the company reported last year for the same quarter. And sales growth also increased pretty substantially, coming in around $355 million. That's 54% year-over-year growth. And so we also see billings growth increasing 37% and deferred revenue increasing about 55%, as well as guidance for both Q4 as well as the remaining fiscal year moving to the upside, but the stock is down. So if you consider the stock itself relative to maybe some of its competitors, like OKTA, for instance, we talked about this company, I think yesterday or the day before. There's a lot of cybersecurity names that have been reporting recently. These two names, ZScaler and OKTA, which are competitors, have been underperforming not just the markets, but its respective cybersecurity peers. I think it's really a story of growth versus growth at a reasonable price. We also see companies like Palo Alto, Checkpoint Software. These are other cybersecurity outfits which are growing, but they're growing at a more reasonable price. And I think that's reflective as you compare the companies over the last year. Now, with the report itself, we are seeing some analysts, which are still bullish on the stock, actually reduce their price targets to the downside, but do maintain buy and outperform ratings. Like Deutsche Bank moved their price target down to 190 from 215. Even Wells Fargo removed or reduced their price target to 160 from 190. But they do maintain buy and outperform ratings on the stock because it's growing at a healthy clip. It's just not growing at a very reasonable price. And what I mean by this is if you look at the forward multiple for 2023's earnings, it's trading around 123 times 2023 earnings, as well as 90 times 2024 earnings, as well as very lofty price to cash flow at 50 times, as well as price to sales at over 9 times.
Well, it's interesting because we really saw the divergence between ZScaler, OKTA, and the rest of the names that were on the upside and how they had taken off. Names like Checkpoint, you said, Palo Alto, those were doing much better. But still optimism surrounding a lot of those reports from the analysts. So how would you go about trading it?
Yeah, so the way that the price action is reflecting the report today, Nicole, kind of speaks to that multiple compression that I'm trying to allude to with my analysis here. So with that said, looking at the stock, despite the fact that a lot of the analysts are bullish, I don't necessarily see a lot of momentum on the bullish side for the stock. So we can capitalize on basically a suppressed stock price by putting on a neutral to bearish trade. In this case, we're going to go out to the January month with about 50 days to expiration and sell a call spread. So what we're going to do is we're going to go out and sell the 145 call, and then simultaneously we'll buy the 150 call above that. So altogether, this can be sold for about $1.30 a share or $130 a contract. So the whole objective here is for the stock to just remain below $145 between now and expiration in January. And again, the risk is past break even, which is 146.30. But you also have to consider the max loss potential. If the market rockets higher and ZScaler goes higher, the max loss in this trade is $3.70 a share, and that's above 150 or higher between now and expiration. So if you think the stock is not going to, have a V-shaped bottom and recover very quickly, this is certainly a trade one could consider.
I understand what you're saying, and is it really going past 146 anytime soon, right? It's been in this sort of area down here. Very interesting. Gorge Tsilis, thank you for a great week on the disruptors every single week here on Trading 360.